The Fed spoke at 2 o'clock and they said 75 basis points, which is what I've been saying for a number of weeks. Now, exactly what happened, if you watch my pre-market video that I dropped on Twitter and Discord, but Twitter for free, so everybody knew what expect today, I said if it's 50 basis points, drop and a further drop. 75 basis points, drop, and then a quickly bounce back. And then what did I tell everybody on Discord at 12:30? I said, they're going to sell off the market into it. So a lot of people were playing UVXY, and I played UVXY calls. I got in at 71 cents. I got out at 95 cents when the UVXY spiked to $16. But that wasn't it. It spiked all the way to $16.16. I said, get out. Why? Because after that, you can see the UVXY tumbled all the way down less than $15. Yes, it's at $15.30 right now. But I had to make a video because if you're one of those people that is waiting in UVXY calls saying, yeah, $18 is coming. Oh, it was just under 15. Now it's $15.30, Matt. It's going higher. You're wrong. The market was telling you all that uncertainty, which I have on my chart right there. Besides for all the uncertainty, trade in doubt, the UVXY tells you future volatility. There's 2 straight days of outflow. So let me just bring up the chart real quick, spread it out here. Let me show you what exactly what we're seeing. So we'll go down to like maybe a 5-minute, but maybe a 30-minute chart, just so you can see the larger picture is we gapped up here all the way from 1476. So we had to fill the gap. Now, if you look at the UVXY over time, and again, go back to 1 week, all this ETF knows how to do is go down. So unless we're talking about a nuclear war or something catastrophic, the UVXY goes down. And that's what I was warning people on my Discord. So let's just talk about what to expect in the market going forward. All right, what does that mean? Because I saw a lot of people on message boards, especially with the UVXY, which is why I'm shooting this video, going 50 basis points. 75 is going to be great. We're going to the moon. Understand what you're investing in. If the market is anticipating 75 basis points, and that's what the Fed gives it, and the Fed gives it forecasting of possibly 75 next month, then the market's going to settle down. If the market settles down and finds a base, there are institutions on the sidelines waiting to buy it up. So let me tell you now what perhaps has me worried. What could possibly flip the switch and all of a sudden the market throw up on itself going forward? Now, I'm not saying that's going to happen, but I want to give you a few examples of what could potentially happen. Consumer credit card debt is through the roof. Credit swaps are going up. So there's more pressure on the credit market. Now, if the Fed continues to reduce their balance sheet, which they said they were going to do, and quantitative easing, then I expect credit risk to get worse. Now, again, there are only very few people like myself and other people on Twitter that are talking about credit swaps, credit risk, consumer credit going through the roof, credit card debt. Ford came out and announced its default rate on their car loans has increased, but it was so low to start out with that the increase still keeps it extremely low. So even if the UVXY, and I can bring it on right now because as I shoot this, it's spiking to $15.48. So even as it spikes, okay, $15.50, go down and get that 3-minute chart up. 3-minute chart, we're filling the gap right here. I think it's going to reject $15.60 and probably head down and close the day probably around somewhere around $15.14. So as you watch this video, hopefully tomorrow morning, you'll see, did we go up to 1560? Right now we're at 1558. So we're almost at 1560. Now, if I was live trading at 1560, I would be buying puts. That's how you think. It's not like you chase as this going up. You go, oh man, it's going to 17. Let me buy calls. No, I'm a contrarian. I'm thinking the opposite. So as it's at 1558 right now, again, if it goes 1560, I'm probably going to switch over and buy some puts. And they're not going to expire this Friday because that only allows me one Thursday and Friday trading day. And if I'm incorrect, which we're not always perfect, but if I'm incorrect, my trigger just went off, 1560. I see my puts got bought. So again, I went out till next. The point is, just because we think we're going to be right, you must give yourself enough time. So hopefully when we're all watching this video tomorrow morning, the UVXY will open up in the $15.15 to $15.30 range, which will be down a whole 35 cents from where it is now, telling you futures volatility isn't as crazy. That everybody's expectation of the market drop and the SPY going to a level of 360 isn't going to happen. If it were going to happen, it would have happened today when the Fed spoke. It would have happened if the Fed said 50 basis points, the market would have said, Fed, you have no control over the marketplace. And you know what? We don't trust you. And we're going to sell all of our shares of stock and all of our derivatives. But that didn't happen. We saw a quick spike. We saw a quick dip. And now we're back where we at in a strong market. Now, of course, stocks don't go straight up or down. So when the Dow goes up and all of a sudden it shoots up from 200 to 300 to 500 points. And yes, at the SPY was 378. I told my Discord, I said 383, 384. It just touched 384 not too long ago, which is when I decided I must shoot a video. More than just us can be correct. You can be correct even if you had a bearish sentiment on the market. You have to wait for when you think it's topping. When you see the market topping, you see resistance, that's when you get into your puts and you're like, okay, I made 10% on my puts on the SPY. Now, if you got into SPY calls with me, you probably made over 100%. Now, as I shoot this, I'm going to bring up the UVXY again because it went from $15.50. I told you my entry, I'm looking at $15.60 to get in because I think it's going to finish around $15.15 on the day. What happened after I bought my puts? Well, anybody have it? You guys probably got in better because I got in $15.60 and it went up to $15.65. So somebody probably got in 2, 3, 4% better. Again, right now it's trading at 15.45. And where do I think it's going back to the end of the day? Here we can see. Huge buy. Again, I gave my alert right in here at 1560. That was my target. Why? Because that's exactly where it faced resistance here, here, and here. So 3 times when it dropped through, it didn't surprise me that it went back up. And it's not surprising me that it's dropping back down. End of day, I'm looking for it to close in this range, $15.14. So right now we're going to $15.41. So that's how you live trade. You don't get excited when you see the buying here and going, oh, I'm going to jump on calls. This shit's going through the roof. What you do is you plan accordingly and you say, if it goes up to this specific price point, here's the target that I'm going to enter in with. Here's the position I'm going to enter in with. You never enter in with a full position. So for me, I only buy 4 to 5 to 6 contracts if I need to, and I need to double down, I'll buy 6 or 7 more. So that's why I trade simpler. It's much easier to take smaller positions, take the profit, and build up your bank the right way instead of over leveraging your account and waiting on one position to strike it rich. That's not how the successful traders do it. If you like this video, stick around. I've got other videos. And this afternoon, I'm going live with Champ Trading. Follow him on Twitter. He's great. And hopefully PB is going to join us as well.